So you guys can see my screen, right?
Yeah.
Okay.
Yes.
So yeah, we're just talking about the concept of liquidity, types of liquidity we have. So I'll just brush you on just the definition of liquidity, then we'll just go back to the internal liquidity and external liquidity. So I was explaining to them that liquidity is actually what makes the market move. I know you know of that. What makes every candle to go up and go down and go up and go down is because there are liquidities inside the market. So in just basic definition, liquidities are just tons of money. So I'll say tons of money. Everybody have their buy orders and their sell orders everywhere. So those buy orders and sell orders is what actually make the market to move. And most especially, liquidity are most especially resting upon swing high and swing low. So you already, Manuel, you already know what swing high and swing low are, right?
Yes.
Yeah. So initially, if I wanted to sell from this place to where market got to this place, I will have my SL set upon here, right?
Yes.
So many, yeah, and to just deviate more, you are not the only one who want to sell from here. A lot of people, millions of people in the market, both individual trader and big institution want to sell from here. So this place now, having my SL placed upon here is me having my money placed upon here I want to lose. So you plus other traders' money are having, there are much money resting upon here. So there are tons of money resting upon here. So to just put it in our term, there are tons of liquidity resting upon this zone, upon every swing high and every swing low. Because that is where everybody wants to put their SL. When market is going to go down, it's going to go up. So liquidity are resting upon these highs and liquidity are resting upon this low. So this high here that we have is in layman from our sell side liquidity, because this was the highest point where everybody will have their SL set before market sell to the downside. These are our sell side liquidity and these are our buy side liquidity. So I was explaining series of why, okay, if markets want to take out each liquidity, what we determine if markets will go for sell side or go for buy side liquidity. Because from what we can see now, after we had this sell side liquidity created, this buy side liquidity created, only the sell side liquidity has been taken. This buy side liquidity is still intact. Markets didn't go up, sweep, went down again. You can see this sell side, buy side liquidity is still intact. When you are considering your liquidity concept, you should also consider market structure. Why each of them? Because we can see that market is buying. So we don't expect market to create a swing high and create a swing low and take out that swing high and still come and take out this swing low if market is going to keep buying. We expect only swing high. So now we are expecting more of sell side liquidity and less of buy side liquidity to be taken in the market.
Okay.
So not entirely the market will not take out buy side liquidity because this is on the daily time frame. So I'll just use the explanation we had on the 1 hour. So, looking at this 1 hour now, this is our swing high. So this is our sell side liquidity. This is our swing low. So this is our buy side liquidity. So markets went up again, created another swing high. This is another sell side liquidity. Market went down and swept buy side liquidity, as you can see here in this lower time frame. Swept it and went inside a daily order block, a PDRA or a key level where we want to initially buy. So this is where I wanted to buy from. This is where I want to buy from if I want to buy. The market has dipped into there and giving us a move to the upside, scraping this sell side liquidity. So now market has not only swept, market broke above this swing high. So now this is a change of character on a 1 hour. We are just expecting market to give us a retracement and go up again, taking out this sell side liquidity and keeping out this buy side liquidity, which is this swing low intact. So I won't call it liquidity because liquidity are meant to be taken in the market. I will call this swing low and I will call this swing high because markets should not come and sweep this if we are going to stay by. Market should not come and sweep this if we are going to stay by. It will be a change in state of delivery. There is a change of trend if market should come and sweep this again. So we know that market just came to do buy side liquidity, sell side liquidity, and market swept buy side liquidity, swept sell side liquidity. Now it's going down to sweep buy side liquidity. Then we know that market is going to move down. But from what I can see, market has already reacted on this key level, giving us, so we have not just key level, considering my consideration in when I want to actually take a trade. We had this low put here, this buy side liquidity. Market swept liquidity, tapped into a key level, gave us a change of character, which is here. So now I'm just expecting a retracement to long up to this sell side liquidity we had resting upon here. So I don't know if you actually get this concept now.
I do.
Okay. So that is enough of buy side and sell side liquidity. So now to internal and external liquidity. So what most people will call it is what I just explained. Most people will call this low here, external liquidity, because it's outside of this range. They will call this high here internal liquidity because it's inside this range. But to me, it's just buy side and sell side. What I consider as my internal and external liquidity are this. So this is a swing high. Sorry, this is a swing low here. This is a swing high here on a weekly. No, this is just the high of the week. This is just the low of the week. So we want to consider the swing high. This is the last. Then this is the last swing. This is the lowest of this candle and this. This is the highest of this candle and this. So this is our swing low. This is our swing high. Market created a swing low here. Market went up again, created this swing high. So we won't call this swing high yes because the other candlestick have not been formed yet. So for us to just determine if this should be a swing high, but this is the highest point we have here on the market presently. So what I consider as internal and external liquidity as external liquidity first as swing high and swing low in the market. So that is our external liquidity we are looking at. Swing high and swing low resting the market. So this is our swing low, this is our swing high. So markets will just move from internal liquidity to external liquidity. All of these are according to market structure. Because if we are buying, we are expecting market to take more of swing high and external liquidity than swing low and external liquidity. The market is buying now. We're expecting market to take out. This swing high as our external liquidity, then go into internal liquidity and go again for another swing high again. So now market has done this, went up again, done this again, went up. So our internal liquidity by definitions are FUGs, fair value gap in the market. That is my internal liquidity. So markets move from internal to external, internal to external. That is how markets just move, because markets want to offer equal price action. As we can see from here, markets went up to this place, leaving this fair value gap inside here. Markets went down into the fair value gap. Market went up again. We are buying. we know we are buying. And once we had this internal liquidity fill, our eye should be on external liquidity. This high here, market went up again. On a weekly, that is where we had this, or this, yeah. So on a weekly we had this FUG here. So markets went down inside here into this weekly FUG, and we are buying. We have moved to internal liquidity now. Our eye should be on external liquidity. This high created here. So that is how markets just move from series of internal liquidity and external liquidity. And this is not just on one single pair. It works on every single pair that I have traded. So looking on this now, so can check what happened here. This trade, I took this trade from this side chart. So markets went up, created a swing low. Markets went up, created this okay. Markets went and created this internal liquidity. So after we created this swing low, this was the swing high in the market. Before markets went down into internal liquidity, and we are buying this price action. We are buying. So we have done internal liquidity. And once you are done with internal liquidity, our eye should be on external liquidity, which is this high. So just looking at that monthly range, that is what brought my eye to actually take trade from there. So we move from this is the internal liquidity on the monthly. Market went down, went up, created this high, went back to internal liquidity, created, as markets finished with internal liquidity, we're expecting market to do what now? To the external liquidity. Market has swept external liquidity. We should expect market now to go into internal liquidity. And the only FUG I'm seeing here is this pink zone which I marked. So I'm expecting market to do this now, to do something like this, go into internal liquidity, then back to external liquidity. This high here. That's what I'm expecting market to do. Absolutely, from internal to external. The only situation where this will not work is if we are changing, our market is changing trend. So, okay, if market will want to sell from here, if market wants to sell from here, then definitely market will not do. Okay, it's still internal to internal. Because, as I said, external liquidity are swing high and swing low. So if markets enter into this internal liquidity and this FUG fails to hold, the market will go definitely to external, that is to this low here. So just understanding it, internal to external. Let me just draw. So we have something like this. Market goes into internal. We have external taking out this low here. Maybe if we have a change of character, markets go back, sweeps this high, market have taken out external liquidity, go back and look for internal, it goes up again. So I'll just add those images of FUG to just complete the whole. So this one. This another. So on this now, markets have given us change of character. Markets now has come back into internal liquidity. Our eye now should not be on this low. Our eye should be on this high. So everything that is about liquidity that I've understand the market is liquidity. Market will definitely seek is liquidity, but in line with market structure. So understanding those two will actually offer you a long understanding on how the market is moving. Just understanding those two, your market structure and your liquidity. Because checking on this mass, yeah. Most people say, on the daily it's a sell. But I'm not seeing any sell. Because this is just markets going inside after taking out external liquidity and creating another swing high. Market now has gone back into internal liquidity. I'm expecting market now to take this one again because we are buying. We were buying like on a very, very long time. Market was buying up. So I don't expect market to do something like this again and still come down to this place after reacting on this PDRA. This low now should be a strong low. But if market should break this low, then we are not going up again. We are definitely going down to take form of liquidity, which is this low here. So let me zoom in a little bit further. Which is this low and this low. And maybe market can now go from there. It's okay. Let's continue buying because market will still buy. For me, I just have my intention, my analysis telling me to buy because we did not just do all these criteria here, which is what I initially want to buy. Sweeping a low, tapping into a key level, and giving us a change of character. Now, using this understanding of internal to external liquidity, market has broken structure, change character to the upside, and left after market take out this external liquidity, this swing high. Where is the internal liquidity? Right here. So this FEG is our internal liquidity. Once this FEG gets filled, once market do this, while keeping in mind we are buying, once market gets to this FEG, anywhere it wants to get to, whether market come here or get to this point. Once market gets here, and markets give us another change of character in lower time frame, we are now seeking from external liquidity to internal liquidity to external liquidity. I don't know if you guys understand this.
Yeah, it's clear.
So that is just how market do. So that internal liquidity and external liquidity is also available on lower time frames too. It works on all time frames. So let me just check on to you. There's a trade I did. This is deep. So yeah, should break. I think it's this. Yeah, I think it's this. I have the pictures, so I might check. I don't know which market I did analyze on that stuff. Let me just check the lower time frame to see clearly. Visit. Yeah, sorry. Let me just go to just and see where I have them. See. Yeah, it's AUD. Let's go back to it. Okay, this on a 4 hour. And this was 2,500. So let's just go on. Let's just go and check it on the real price action there. It's still loading. Yeah, so back to the 4 hour. See it. okay, yeah, it was this. Sorry, not that up one. It was the down one I used. So yeah, sorry for taking much time on that. So I think I initially had a buy on AD on this actual zone here. No, not from here, sir. From here up to this very point. So market was just moving up. So I wanted to actually sell from this particular place. But I saw this FEG that market has taken out external liquidity. Market should now give us internal liquidity, which was this place here. If this was on a weekly, the FEG in place was on a weekly. Yeah, it was on a weekly, the FEG. So market has fed external liquidity. I was expecting market to do what? Get to internal liquidity using that ideology. So I think, as I told you guys, market does not care about much about your PDRs. What market will do, we do. It should just be it should just be very, very smart to be flexible in your trade. So I initially saw this. The market went down. I saw this, the market was reacting on this demand zone. It was a very, very bright wrong signal for me to have taken the trade. Wrong signal for me to have taken the trade. So when I saw this, the market was reacting on this, I said, there's nothing about trade. There's no mistake in trading to me. I think every mistake is just a platform for you to actually learn. Because if you don't learn, there's no how you can make money off the market.
Maybe you should take water. Because I feel you've been talking and you are getting dehydrated. I will take water.
No more water. I think it's insecticide that was sprayed that I actually had in my throat. So yeah, let's just get back to it, guys. So yeah, so this is another FEG here. So this was where the confusion actually started from, because market was just doing two PDRs, this demand zone and this FUG. But I saw where I had the initial confidence that market have changed its own character was when market closed above this FUG. So that was one signal that I used. Market closing above a FUG was okay, definitely the market is not going to sell again. So that is what I used. I saw that market close above this FUG, hitting my SL, and I just waited. I saw another opportunity here. Market getting to this. Market created the 4-hour FUG, almost close to the swing high. That is our external liquidity here. So what did I do? I just had the FEG open, and I just wait for market to react on it. So I went to a lower time frame. So I'll just share the whole stuff from the picture, so I'll be very, very accurate on. This was on a 30 minutes. Yeah, so I went to 30 minutes, but I think the trade was taken on a 15 minutes, not a 30 minutes instead. Yeah, 15 minutes instead. Nice. So yeah, so this was the low. This was the price action I used when this one set here. So let's just mark this swing high. So this was the swing high on that 4-hour internal to external. So this is our external liquidity. Market went inside the internal liquidity. So you are just using your time frame alignment on this, because this is on the 4-hour. You definitely have to go inside the lower time frame within the 4-hour to seek for entry. So my confirmation was this. Let's check this. So yeah, That's it. Using what I explained that time, once this I do, it sweep into the key level which I want and a change of character. Then I will buy off it or sell off it. So just using those my confirmation, this was the key level. This 4-hour internal liquidity, 4-hour FUG. Market created a low here. Market created a low here, went up, swept this low. We had a sweep. Now we are waiting for a change of character. So initially, I don't actually make use of market structure shift or change of character. I use something called CISD. So the full meaning is change in the state of delivery. Although it's the same thing as market change of character or market structure shift. Just initially, the market structure is making use of the whole body candlestick that caused the change. But one thing I like about CISD, that is change in state of delivery, just make use of the body. So this candlestick is what we are making consideration in this particular stock. This was the last down close candlestick that swept liquidity. That is not even the last, that is the only candlestick that swept this low here. So if I want to wait for a change in the state of delivery, I will mark this high here, the high of the candle, the body. That is where my change of state of delivery will be, and wait for a market to close above it with a body candle, not with a wick. You can see we had the first one closing with a wick, the other one closed with a wick. Markets went down. So waiting for a body candlestick close was a very, very good confirmation to keep in alliance with this, to just avoid unnecessary loss. So markets closed with a body. When I saw that, I said, oh, I think this is time to actually trade. I think it was on a 5-hour. I went again. No, it was just okay. See this. The 4-hour, it's a little too much choppy. So let me check on the image then. Okay. So yeah, it's from the image. Let's just go back to the 15. Hope you guys can still hear me, sharp. And you're following up.
Yeah.
You know.
Yes.
Okay, very good. Stops. Let's just continue up. So this was it. So well, I would have entered off this. It was on the change in the state of delivery. What I just had to do was to mark 50% of that candlestick that caused the change of the state of delivery, which is this. My 50% of this candle, the whole candlestick, is here. I wanted to take the trade off from that change in state of delivery mark, and I want my SL to be very, very safe. So I had my SL placed below 50% of that candle here. I think SL was around somewhere here also. So I didn't just target that 4-hour external liquidity. I know market was almost at this swing high. So all I just targeted was, I think, 4-hour. Yeah, I think 4-hour from the image. So 4-hour was almost at that extreme liquidity we had there. Then this is what market did on it, as you can see. Markets went down. As you can see on this image, we never got down. We just tapped on that 50% level, that is 0.5 level. The market started pushing up. Tagged us out, went down again, went fully to the extreme TP. So that is everything. All my charts I have here adjust series from internal to external range liquidity. What I just basically use internal and external range liquidity in alignment with my time frame. I think that is like, to me, it's the most simplest form to even trade off, because you just need to just find two things and align them with your market structure. Then you now personally stick on whichever kind of trade you want to take, whether it's whether it's trading, whether it's scalping, whether it's swing trade. Because I do more of swing than intraday. Do more of swing, because just take and you just leave the trade. You just have one trade set the whole of like 1 week or 2 days. Not personally sick, because I'm quite busy with work, so I will not have enough time to actually come and check in the chat every time. So I just do things when I'm less busy, just have them. So that is just basically what we had today. So I hope you guys understand the internal, the external liquidity.
Yeah, it's clear.
Yes. Thank you
Yeah.
very much.
Yeah. Internal. So it's just internal. So please can you have your stuff muted? Yeah. So it's just internal, external, sell side liquidity, buy side liquidity. But I don't actually consider sell side and buy side most time. I just use internal, external, since it's what market just seek for mostly. And now on this, so now we're not just talking about this thing, just giving a month weekly look at. On this now, we can see on this current price action, Euro JPY, market has been buying for series. Okay, you guys can actually see this pattern. This was the pattern I shared with one of my guys. On this particular trade, market was actually at this zone, this low here, this particular place here, this. Where we actually analyzed it together. I shared it with him. The market is creating a form of pattern, because you can see there's a reaction on this other block. Market went up, and market was just reacting on this trend line. You can see from the diagram, went up, created another low, went down again inside internal, and I can see these ranges of internal liquidity. Market has given us internal, went from external, went down again, and went back up. Market did this. We took the trade. I don't know if he initially took it, but the trade was placed from this zone up to this particular trade. I hold it for almost 2 weeks. 2 weeks the trade, to show you how just using your market structure in line with just internal, external liquidity. With liquidity initially, not just internal, external. With liquidity, we just offer you so if you had this opportunity to even buy from here, you'd have just maybe possibly stack up to 10 positions, then leave it run out. The market gets up to this place, you would have made a whole lot of money just understanding market structure and lining it with your liquidity. Because market was buying, I was expecting more of buy. The market was just respecting this trend line. We had a touch here, another touch here, another touch here, another touch here. So on what we can tell on the weekly, market is still buying. Let's check monthly. There might not be much on the on the monthly to market is still buying. And you can see on this monthly, market closed with a body candle above this swing point here, not with a wick. You can see this body candle closing above it. That is the confidence I use in my trading. That is to tell me that market is still going to go up again. So we are just expecting market to give us a low again and go up. This initial swing high here. This swing high. So that's been marked out. We are just looking for internal liquidity that market might tag along, which is this. Sorry for there's no way I can actually remove this line, because I just have them marked on something initially. So this is the internal liquidity. I've taken out external. I'm expecting market to come back into internal and go back for external again. So just looking at this now, that is the only thing I have in mind. Once market gets to this place, I should look for buy entries, confirmations, a sweep into a key level, change of character, then retracement, then long up to this place. So we're just going to a daily. Let's see if there's anyone placed. Yeah, there was one place on the daily. I think we marked that out. I shared this with L, so you should know of this. Yeah. Okay, this is it. Yeah, you can see here. So this was the whole idea, the whole thing that was happening on the monthly. Market was pushing up. Market did a break of structure here. Another break of structure here. Market is still buying, very, very much buying. So this was another break of structure. This is a new putted swing high. So now looking at this now, and we have our internal liquidity resting up on here. What I will expect is a sell to this place, sweeping this low. You can see a sweep of a low, then change of character, and we can buy to this place. That is what I will expect to happen in this place here. Market should sweep this low, and start into this other block here, and give us a change of character up. So the signal we want to enter short is what I had here. We had this series of up close candle that went to sweep this liquidity. Market go went up. So this green candle, 1, 2, 3, at the series of up close candle that we have. So market closing below this is where we have our change of character. So this red line is our change of character. The change of character deals with the swing low or the swing high. Change in the state of delivery deals with the body. We have both change of character and change in the state of delivery. Market close below all of this. Below it, I wish we had a week. It would have been another different story. But we can see market close with a body candlestick below it. So this was what I was expecting. Market should come and do this. I think I have the picture of it. Let me just take. Hope you guys are following.
Yeah.
So I'm sorry. Let me just use it to take it. Okay, yeah, this was it now. So it's external to back into internal. So external back into internal to external. So I think this was the picture. So I was expecting market to go up to this zone, into this FUG here. The market should drop down. And from what we can see here, market has done just one of the job we need. Up to this place, market has reacted on that FUG we want. So now, I'm expecting market to sell from here. So initially, if I would want to enter, I wouldn't want to even enter from here, because if I want to enter sales from here, I'll have my entry here, and my SL will surely be above that candle, that FUG candlestick, because having my SL here is a very, very risky one, because markets might go up again to feel it. But you won't want to trade this, because most of us here are not swing traders. So your best opportunity is actually to wait on a dollar time frame again and seek for more entries and confirmations again. So this is another good confirmation here. This is a series of this is the only up close candle that went up to that FUG we want. So if I want to mark out change in the state of delivery, it should be here. So that is where I'll change the state of delivery should be. Markets closing below So that is why you have to wait for that close below it. As you can see here now, market went down with a wick and closed back inside. If you have taken the trade there off it now and maybe put your SL there, and market do something like this now, go up now, sweep your SL to bring it down. But that is why you have to be very, very patient for that body candlestick close. If I want to even sell again from here, I'll wait for market to close below this. And now this will now validate that market will not come back to take this high here. So I'll put my SL here, put my entry on this. Target with either I want to target this low here, or I target to the up of the FUG. And that alone should have, that trade alone should potentially give you almost 3 hours. Should give you 3 hours or more. This the high. This low. So this one will give you 3 hours. Just having it down to this place. Because I like 4 hours very, very well. So having it down to this place, just give you 4 hours. I want to even tighten my SL. So the body is not even the weak. The body is, and having this very, very precise on the 4 hours. So definitely, once market has getting to this place, it will surely like the FUG. So I think just having it here. I have this one back. But this entry will only hold once I have the change of state of delivery met. So that one is on GBP AUD. So not every one of us here trade it, so we'll just go to the pairs that people normally trade, which is good. I think everybody here like gold very, very much. So
except me.
Oh, you don't like gold?
But
If you don't like gold,
not my agenda now. I'll get there soon.
Oh, wow. Everybody, when I started trading, most people, everybody want to trade gold. Volatility, this one, that one. Everybody wanted to trade gold until when gold will start showing people better. So yeah. Let's just go back to it. So Emmanuel, can you see hear us? And Ola, you too. Emmanuel, can you hear us?
Yes, I can, but I can't see the screen very well. I'm just...
Yeah, no problem. You see the LC has the screen record, so that one will be available after it's almost entered. But no, let's just continue. So this is on gold. They're using our internal to external. Market is respecting this external range liquidity, which is this FEG we have here. You can see the only thing that is dipping inside it are wicks. This wicks went in. This is the wicks that filled the FUG. The other wick went inside. Not necessarily close below this swing low on the monthly, and that's just that on the monthly. You know, as last week we did this stuff on gold. We analyzed this gold and market should sell. I don't know who actually sold from it. So the analysis was to sell from either a breakout block or a FUG that was resting up here. According to this chart, just go back to the picture. Nothing, I don't have this. Is it possible that I don't have this? Wow. But either way, hey, you were here now. You saw the whole analysis last week that we had.
Yeah, I did.
So market did not get to the FUG although, but respected this breakout block. So seeing these markets going up, seeing these markets coming down, breaking this low. I think a retracement would have been a very, very good opportunity to sell to all this low we had targeted. All this low is what we had analyzed on last week. And market has did what we want already there. So I'm expecting market now to start giving us buys and more buys up to all this. First this previous week high, this high here to wherever market wants to get up to. So going to the 4 hour. So this was it. We had all the slow sweep. We had all the slow sweeps. Market went up into this FEG, indicated it, and was going down. But I noticed something happen here. Although market, what I would have preferred was market to sweep this low again, sweeping this low and giving us this change in state of delivery here. That's what I would have preferred. Very, very much preferred. But still looking at this, as I not just using at only your change of state of delivery. You can see here, market has not given us a change of character. Yeah, because all we are just seeing is wicks. Market just use wick to sweep it. So until markets close above here, before I can validate taking buys. But what I'm expecting market to do is that market should have swept here before it gave us this change in state of delivery we had here. So with this, I'm not taking buys yet. I'll wait for market to close above this, and I cannot take buys off it. And definitely this place will not be, or this place should be, no, this place should be our strong zone. Since this low was created, market did not take out that low. Market created another low. I would have very, very much liked if market would have taken out this and went up. So if you want to buy now, just wait for the change of character. Market should close above the body candle. Because all I'm just seeing here is weak. There is no strong confirmation to actually buy here. So avoid unnecessary loss. So yeah, I think that is it for good. I think this was another one for, let's go to BTC. BTC has been crazy lately, but I just want to pinpoint a few things I actually understood from it, though I did not trade any of it, because the way market has been moving, it's just how once you understand this market structure, internal liquidity, how much it will help you, that you can actually utilize it in every market. So when I had all this stuff from BTC, what BTC was doing here, I've traded BTC for quite a while, so I know when the guy wants to do that is with a nonsense. So I shared this with a group I joined, Forex. Yeah, in the group now. So I said it on the group that market had this and this. Market should take out this and also come back to take out this. But this was the picture of it. Validate the conversation. Yeah. This was it. Exactly. This was this. I expected market to come, sweep this high, and give us another change of character and dump. This was not only on BTC, also on SU too, because I was expecting SU, as market has reacted on this internal range liquidity, this FUG, market should dump to this low, to another internal range liquidity, because this FUG here is a monthly internal range liquidity or a weekly order. So I was expecting market to react, to go back deep into it, and market has reacted on the daily internal range liquidity. It should go to external range liquidity, which is this low, which was closely beside the weekly internal range liquidity. So all this was not quite long field. Market has done one of the job. For me, understanding that market will go up, I wanted to even buy from here. So let's just use that internal range and liquidity on this now. As you can see now, this is an FUG here. Sorry. These people with you're adding. This is an FUG. Market did this. This FUG was mitigated. See it? You can see like this before market started buying. So market did internal. So although our first external is this, because this was the last high that was created before market went down to internal into external. We understand that market definitely is going up. So having this place as your take profit too, this place should be your first take profit. This one should be the second one. So market did internal to external. Went back inside the range. Inside the range, market has given us down to this place. This is an internal liquidity on FUG, which is still open. Sometimes we might have things like this when markets will not come back to fill. Because I actually feel that, okay, this is an FUG, this is another block in the 4 hour. So the other block was resting upon the FUG. What I was expecting market to do was market from this place, market to come down, go up to this place, sweep this high and dip into this place. But market did not do that. Market did this instead and still go down. So I think it was on it. So share this on.
The question, please.
Okay.
Like if I get what you've been explaining now, we can actually use fair value gaps as internal liquidity, right?
Yeah.
Okay, no problem. Yeah.
Initially, fair value gaps are the internal liquidity to me. Fair value gap. So, and it's applicable on every time frame. The weekly.
Yes, I get fair value gap. Sorry for cutting you. I get fair value gap is applicable on any time frame. Actually, I get that. Since you're saying we can use it as internal liquidity, I'm trying to get that when we have a fair value gap, I want to use that internal liquidity. Are we expecting the value gap to be taken out, or price just tap into like the 50% of the value gap and
yeah, you know when I told you about the internal range and external, it should be in line with your market structure. That one will determine if, so once you have it in line with your market structure, it will determine if market we get to the FUG one, or we go for 50%, or we disrespect. If we are buying now, don't expect markets, okay, on this on the weekly. Sorry, it's okay on the weekly. If we are going to keep buying, which we are buying on this, we don't expect market to come to this place and close below it. So okay, yeah, it was on AUD. Let me just show you that one on AUD. Okay, so thing is just messed up. We're using AUD before now. Yeah, I think the first explanation was on NAS. Sorry, let's go to NAS. So yeah, on NAS, it was on NAS. It didn't happen. So let's just select this one. So as you can see here, you can see this, right?
Yes.
So this was the internal range liquidity. This was the external range liquidity. Just looking at this here. So market went up, went down. But as you can see here, on a daily, you will see that market closed below that FUG on a daily. No, okay, market did not even close below the FUG. But looking at how markets went down, okay, let's say on a week, on a 4 hour, markets closed below it. You can see all this body candlestick we're closing below this FUG. But what you should understand with it is the higher time frames on. The daily did not close with a body candle. As you can see, all I'm just saying that went through was just wicks. You can see it, right?
Yes.
Yeah.
The whole body was seen respecting 50% level to even talk now. that is half of this FEG, which was this line. This body went down inside, went back inside again. The first one did this, second one did this, the third one did this. On the weekly too, you can see all we are just seeing is just wicks. So back on it. So and the time frame alignment, that is the market structure, was that we were buying. So we are not expecting markets. Markets can take 50%. Markets can take the whole of it, because as you can see on NAS, market did not just do 50%. Market took mitigated the whole of the FUG, almost on a lower time frame, looking like market was closing below it, which can signal to some traders that okay, market wants to sell, because that is what most people think, that okay, from there market will sell. But we understand how the higher time frame moves. That it moves from internal to external, and just using the candlestick formation, there was no body candlestick closed inside less than 50%. All we were just having was just wicks down. So you are using those internal and external range liquidity in line with your market structure. If you are buying, if we are buying now, we are expecting market to fill internal, and from internal it should go for external. So if markets close below this, then we're not just doing internal to external, which is this swing high. We're not doing market as taking internal. The market will now look for another external, which is a swing low around this side. And this is a swing low here. So if markets want to go down again, market should take this. And mind you, this is not the only internal range liquidity you can see here. There's another one here. There's another open FUG that market has not filled. Another open FUG market has not filled. So they are serious of what market might come down again and fill. That's why most people are just anticipating that BTC will dump to 75k level, 73k level. One of the reasons why I don't even want to even trade my own is let me just check other market pairs apart from the ones I'm trading and analyze and see if what I'm trading, the strategy I'm trading will work. That is what just made me do this. Did this one here I had. Because market is very, very shitty. Price can just do something like this now. As it tap into this one now, we'll start buying again. That is one stupid thing that BTC know how to do very, very much. Which is very, very annoying. I initially think that markets have given you that signal to say it is just do. The thing is crazy. That is what made me even when I saw this on a monthly, on a daily, sorry. When I saw this on a daily, the market did this. Market buy again. I said, BTC trader, they don't see wahala. Because how will market do all this now? Putting this low here and still doing this again, still going up. It's insane. That's with what I've traded, I know that BTC, if you want to really dump, we'll first take out that liquidity where most people want to actually even sell from, which is this. I want to say now, I had my essay here. Market did this, and we can see market return back inside this range. So initially, my target is this place. So in terms of what markets want to ever do in this place,